We move on to part B. We're told assess 5 ways which drives expansion of real estate investment trusts. What are the factors that actually drive the expansion of real estate investment trusts? Now, real estate investment trusts, we can be able to provide a description on this other side over here. We can say that REITs over here function like this. I'll just use diagrams to try and expound on how REITs actually work. This is what we call Stanlib. It is in the business of developing investing in real estate. So what it does is that this company can float the shares through an exchange over here, so that it can raise financing towards the investment in real estate projects. So this is what we call the number of shares that the Stanlib has actually floated. So it floats through the exchange like that, and any investor who wants a piece of this instrument can say, for example, I can remove this piece of paper, give it to an investor like that, so long as they can give me the commensurate value in terms of money like that. Another investor can go for the second piece of paper like that. I think you get the point. Yeah. So this instrument over here is floated to the exchange towards raising, for example, the equivalent of 5 billion shillings. Once 5 billion shillings has been raised, then the investors right over here invest in a portion of the company's shares. So in return, so once the shares are given to these investors, money moves in the opposite direction to Stanlib. This is KESHS. Once it moves to Stanlib, the expectation is that now Stanlib will now go ahead and invest in real estate projects such as the one which is in Greenspan, amongst other investments like that. Now, the return on investment for these shareholders, because they're deferring the usage of their monies today so that they can be able to invest in shares of this real estate company, of this company right here. So the rents that have been earned, that are being paid by each floor right over here, for example, like that, are the ones that are distributed now by extension through Stanlib, through Stanlib like this, and by extension they come to Stanlib like that. So you expect that Stanlib should be exempt from taxes because they actually distribute at least more than 80% of the revenues generated from the rent that is actually being paid to them or through them. They are now, which goes to investors over here. So you expect Stanlib to have high dividend payout ratios like that. So now, having understood how REITs actually operate like that, let's look at the question in light of this understanding. So we are being asked to assess 5 ways which drives expansion of real estate investment trust. Now, the first way is economic growth. The first way, economic growth. So if you expect the economy to improve, then demand for housing will actually increase, and by extension, the demand for real estate investment trusts or related products like that. That is what we're saying, economic growth, the impact of economic growth. However, if there is a slow economic growth, then we are seeing that to some extent the demand for real estate investment trusts may actually remain stable or might even go down there. Number 2, the second way of how of what drives, the second way of what drives the expansion of real estate investment trust is the demographics or the changes in demographic. So we can say demographic changes there. If we have this kind of structure like this, so this is what we can be able to say the age groups right over here. And the majority of individuals, if you have the demographic individuals between say 25 and individuals being captured over here are around 40, let's say 45, like that, from 25 to 45 over here. This is say a typical maybe say developing economy structure, where you have majority of individuals between the ages of 25 and 45, like over there. If you have this kind of structure, then you are saying that demand for housing would actually increase, like there. And if demand for housing increases, by extension, it means that the real estate investment trust will also increase their own. However, if you have a structure that looks like this in developed economies, especially maybe say in the Far East Asian countries, like that, you will have the demographics of majority of individuals being 50 and above. From here is 50 and 50 plus years existing right over here. You have a lower population existing over here between 35 and 45, like that, but you have a greater individual or individuals having this kind or living much longer over there. So what happens is that, yes, there will be demand for housing. However, the demand for housing won't be as high as compared to the previous diagram, which I had actually explained over there. So that is how demographic changes have an impact on or have improves the level. Changes in demand improve for real estate investment trust. Number two. Number three, we are saying is interest rates. Interest rates is also a significant factor, but that's related to the economic growth over here. We're saying interest rates. And the link is as follows. If we have increase in demand for interest rates, or increasing interest rates will lead to demand for high dividend yield, or the dividend yields will tend to be high. With high interest rates, then you expect demand for dividend yield to also increase. That means that there's also going to be, by extension, an increase in the demand for real estate investment trust thereon, like that. However, you can also look at it on the flip side. If interest rates are attractive, so individuals are able to borrow so that they can be able to construct the houses. And then once they construct the houses, that means that there's going to be a demand for real estate investment trusts and related products there in the form of real estate ownership companies there. Number 4, we are looking at migration. If individuals, or this is say maybe the town centers, if there is rural, urban, very high rural, urban migration like that, you expect demand for housing to increase. And if demand for housing increases, then it leads to an increase in demand for real estate investment products and associated securities or products there. That is migration. And the 5th one we can say is favorable legal structures, legal and regulatory structures. So favorable legal and regulatory structure. If the applicable laws relating to real estate is not restrictive, then what would happen is that individuals will be able to engage in the construction of real estate investment trusts. That will lead to an increase in demand for real estate, and by extension, real estate investment trusts and related products thereon. So if there is a disfavorable legal and regulatory structure towards, or very stringent rules relating to real estate, that would lead to rather a very closed kind of system where we don't have individuals investing in real estate investment trust and thereon. So those are the 5 factors that actually lead or drive the expansion of real estate investment trusts.